Given the kind of the turmoil that we are seeing in the overall markets, there is a very high possibility that RBI goes ahead and hikes rates by at least 25 bips in the October policy. In fact, quite a few of the economists as well as fixed income experts do believe that there is also a possibility that RBI may in fact go ahead and change stance to hawkish, which is withdrawal of accommodation from the current neutral stance. In fact, RBI's views in terms of the overall situation that's happening in the market, be it on the inflation front, be it in terms of the recent events on IL&FS, as well as the current tightening in the bond markets that we are seeing, would be fairly important. And given the culmination of all the events, there's a very high probability that we see a hike of at least 25 to 50 bips over FY19, according to majority of the economists and fixed income experts. In fact, many do believe that RBI may not go ahead and cut the CRR, but they also expect that RBI's view on the current liquidity situation would be fairly important to watch. Also, their expectation or their complete guidance in terms of the kind of OMOs that RBI would be willing to do over the rest of FY19 would be fairly important, and any comments in terms of the FCNRB deposits would also be fairly important to understand how RBI does decide to go ahead and tackle the overall liquidity situation in the markets. Not just that, again, RBI's view in terms of the overall inflation dynamics will be fairly important given the high crude oil prices as well as a weaker rupee. And of course, with the recent hike by US Fed in terms of the interest rates as well as trade wars, RBI's commentary in terms of how this would impact growth going ahead would be fairly important, because as of now, not many believe that RBI may go ahead and change the forecast on CPI or GDP. But having said that, bond markets are already pricing in at least a 50 bips rate hike by RBI in the very near term.